Today we are recording without the ring light. That's why I can use my specs because there's a lot of numbers involved. Now finally, since we are stuck at home, I have had more time to consolidate my investments, and here is the breakdown of all my available funds for investment. These are the bulk of my wealth. So the breakdown are: hello, Calebby here. As Singaporeans in our third week of the circuit breaker or the partial lockdown, with 5 more weeks to go, I was able to collate and tabulate my funds to do up this video. Now, in the previous few videos on investing, there were requests made to ask about my investment portfolio, what companies I had invested in, and my investing in individual companies or ETFs. And likewise, in my last investing video, I have explained my reason for reluctance to post my personal portfolio out because I have had bad experiences with it. So Singaporeans use WhatsApp chats for the different groups. So there were a period of time when I was posting my portfolio details into those chats, a few of them, at the point in time to encourage more of them to start investing, because I realized that most of them are not invested in the market or in any other platforms. Most of them are relying on the CPF for their retirement. But a few months down the road, I realized the side effect of posting my portfolio publicly or in those WhatsApp chat, because there are many people who do not do their own research before they make an investment decision. What they do is they will see what other people are doing and then they will just copy or follow along. Now, I'm not saying that it's bad, because for me myself, I would also look on successful investors, what they are investing in, the companies they are investing in, so that I can take a look into those companies, into the annual reports for the last 3 to 5 years, and look at the company's history, what they are doing they doing what they say they will do, is the management crisis proof. Like we have seen in this current situation, some management aren't, but there are some who are crisis proof. So I get that most people do not have the time to research into the whole Moody's manual or all the companies in the S&P 500. The most we could do is maybe research 1 or 2 companies at a single time, then the next week we will research another company, and so on and so forth. Even so, just with the S&P 500, it would take us up to 10 years to finish researching every single company. And by the time we did that, a chunk of those companies that we have researched into would have gone into the abyss or be removed from the S&P 500. And there are and will be more and more companies who will be added to the S&P 500 as such. The research never ends. What we can do is keep up to date with the news, and also to read on their annual reports once they're out, to gauge for ourselves whether the company is doing what it says it will do, and whether the company is still a good company to invest in, and whether the valuation that we have for each individual company are still strong, or is it growing? Are we valuing the company even more now, or are we valuing it lesser now after some mistakes that they have made? So I understand the need to look at other people's portfolio, but reminder that you should do your own research. Do not be like my friend who purchased stock based on my portfolio, and when the market began to tank in January to February of this year, he began to panic, and in the end he was forced to sell a few of his shares at a loss, so he actually lost money. Now that friend is a mature adult, so he is not blaming me for his losses, because he understands that he himself was forced to sell. But a little part of me still feel that it is my responsibility that got him there in the first place, because if I had not shared my portfolio with him, he would not have invested into those companies. So he would likely have just left the money in his savings, which would still retain its value pretty much, especially during these last few months. Now that's a reason also why I have always been talking about the emergency fund, because it is so critical that you have your own emergency fund before you even start considering to invest in the stock market. Now the reason is because the stock market is very volatile, especially in this period. Over time it will grow. We do not know if it will keep going down, but we know that over the long run, over 20-30 years, the stock market will increase over time as the businesses that constitute the stock market begin to make more and more money. Their stock prices should increase in tandem, and also because of the wonderful inflation of course. So as currency inflates over time, stock prices will tend to increase even if the company is not growing but is stagnating. So now before we share the portfolio, I'm gonna talk about the emergency fund briefly. The emergency fund is an emergency fund. So in most period of time, professionals would advise us to have 3 to 6 months of emergency fund before we start investing. And then if you want to be a long-term investor, an investor who invests in company looking at their 5, 10, 20 years outlook, then you will really need an emergency fund. Actually, traders also need emergency fund. So everybody and anybody who touches stock market should have an emergency fund. But for long-term investor, like I said, in the next 2 years, it could very likely be that the company that you have invested in drops in market value, even though the company is making more and more money or getting stronger in its financials, because Mr. Market is emotional like that. Sometimes he is very pessimistic, sometimes he is very optimistic. Most of the times, however, he's in between. So having an emergency fund would ensure that in any case of a market meltdown, or if you have an emergency that you need to attend to, a medical emergency, something you need to pay off straight away, you would not be forced to sell off your investment at a loss, but you can still hold on to them as long as your personal valuation for them is still strong enough. So the worst thing that can happen to any long-term investor is if you do not have an emergency fund, and also if you do not smash the like button. Nah, kidding, but seriously, helping to like this video would help this channel greatly because we are a small channel, so every like counts. Thank you, all 20 plus of you regular commenters and likers who like every single video. Thank you very much. Let's see if we can break through this video to over 30 likes. We shall see if you do your part. Alrighty, intro ranting done. Now we will move on to my investment portfolio, my entire available funds for investing. So I'll see if I can drop the screenshots probably here because there's a lot of space here. Do note that this portfolio sharing is not an investment advice. I am not a financial planner, nor am I an investment advisor. What I'm sharing is just what I had done for myself, and I'm no millionaire, no accredited investor. I'm just a regular Joe, a regular investor like most of you, just a regular investor like the male peasants that we are. So now move on to investable funds updates, the monetary breakdown. Moving forward, all monetary values that I said would be in Singapore dollars, even though some of the values shown would be in different currency, US currency, US dollars, but what I'm talking about would all be translated into Singapore dollars. So the rate is 1.42. Currently, right at this moment in time, the time of the screenshot, I have about $80,000 invested in the stock market, 20,000 more investable dollars in my bank account, and $11,000 in emergency fund. There's also this chunk of a few loans that I have lent out to some other people. These totals altogether to be about $40,000, but none of these are investment or interest-bearing savings of any sort. They're just personal loans. Now these are pretty bad for wealth building because the more you have that, the less you would have to do investing. I'm sure you already know about that. So as of this moment in the stock market, I have altogether 8 counters of different companies that I have invested in, some more, some less. Their current market value as of the snapshot is $82,331.24. Now because these are all in the stock market, so by the time of this video, once a video is posted, the market is open, then probably the value would have dropped or increased, probably drop. But anyways, if you notice the portfolio, a large chunk of them are in just one counter loan, or to be specific, 56% are in this counter Tesla. So Tesla is my largest investment right here, right now, and these $20,000 are also waiting in line to be used to purchase more Tesla shares in the future, especially if the market still keeps going down and down and down. Now I understand the need for diversification, so my portfolio was not supposed to be like that. Back in December and January, my portfolio for each counter would be between $5,000 to $10,000 worth, so they would not be worth more than that. But because of this current situation, I have placed more and more money into the companies which I have a stronger belief in that they will succeed. Now if you like to learn more about Tesla, do drop in the comments and I would see if I can put together a video. But as of right now, there are many channels, YouTube channels that share on Teslas. Most of them are Tesla bulls, meaning they are fanboys of Tesla. Like even in Singapore, we have this Chicken Genius who is a pretty smart guy. He would do up videos almost daily or multiple times a week, usually talking about Tesla. So that's a great channel you can check out. I will see if I can put a link or something somewhere. And then in Dubai, there's this Wolf of Dubai who is also mainly talking about Tesla. He does talk about other companies, but mainly on Tesla. He's like one of those Tesla bulls as well. And then in the US, of course, there's the prominent Hyperchange. Then there's Awesome Finance, Investing with Dave, etc. So there are already many channels talking about Tesla. That's why I feel there's no need for me to add in my opinion. But if you really want to hear my opinion, do drop in the comments. If there's enough of them, I see how I can do it. Maybe put it in one of the future videos. Anyway, so for my own personal portfolio, you would see that my local companies shares are pretty low. In the entire portfolio, there's only currently about $13,000 worth in the local companies. Now, if you notice that altogether as a whole, they had decreased by a value of about $3,000, which would be much more if those are calculated from their peak, because their peak value before this whole situation was between $20,000 to $22,000. I'm still currently holding on to them because I still believe in their value, that in the short term, most of them, 3 of them, would likely lose money. But over the long term, in the next 2-3 years, they would be able to get back to where they are and even grow further from where they had been. 2 of them are REITs, Soy Build and Capital Trust. So these 2 REITs would likely see their dividends slashed a lot or even cancelled. And then lastly, the bulk of the remaining investment, including Tesla, would add up to be about $68,000. Now, if you also notice that none of them are supposedly dividend paying stocks. Now, 2 of them had been paying dividends previously, but they're not well known to be dividend paying stocks because their dividends are pretty negligible. The reason for not owning any dividend stock for me personally is because as a Singaporean or a foreigner owning a US listed company, any dividend that was paid out would be taxed 30%, the 30% tax withholding, which means that I would only get back 70% of the dividend payout, which is the reason why all 4 of my stocks in the local companies are dividend paying, but none of the 4 which are listed on the US stock market are not dividend paying or not known to be dividend paying stocks. So now we've come to the end of the video. That's all I have for you in this video. Hope you like this video. Hope you enjoyed this video. Do help to like and comment in this video because it really helps the algorithm, because it really helps this video to be promoted to more people who are watching similar content like you do. This channel is about investing, personal finance and even credit cards. So feel free to comment down below any topic you would like to be covered in our future video and I'll see what I can do. I respond to every single comment, or as much as I can, I respond to every single comment. Stay safe, stay healthy. See you guys next time.